Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, January 17th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We are still trending up. We've continued to trend up for quite some time. In the previous session, we did have quite a turnaround, a little bit of a topping pattern that occurred above 2808s, reaching a high of 2808.5. Basically, from there, we had quite a sell-off toward the end of the session here. We did bounce a little bit, and you can see that basically prices are testing just above the previous session's midpoint. Again, this market has been so bullish overall that it's going to have to be a very significant rejection day in order to start to look for opportunities to fade this move. I think right now the better opportunities lie in looking for failed new lows, rejections, pullbacks below for an opportunity to continue to squeeze. But if there's any failure to really establish above today, say 2788s, right now we're at 92s. If there's any failure to establish acceptance above that zone, that could offer a short-term continuation lower. So right now we're just above that area, and overall the expectation here is likely that if bulls remain above those 88s, you start to see a continuation toward new highs. We continue to see a great uptrending structure. The PIMAs are stacked and sloped. It's leaving behind great LVNs on the profile, which can continue to be seen as support in the uptrending market. Right now, we got to see if we go sideways or pull back a little bit here. Typically speaking, we've seen mostly holding patterns ahead of the next continuation, so that wouldn't be too far out of the realm of possibility to see this thing go a little bit more sideways before we go higher. So we'll keep an eye on the ES. More upside likely, but we could see some pullback here depending on those 88s. So continue to watch 88s. If we take a look here at the NQ, this one had a little bit more of a pronounced tail at the top. You can see a bit of a signal there. And right here, that's the midpoint, which is 87.5. Today's high brings it into about 91.5, currently at 84.75, so we're just below that area. So again, that midpoint is going to be rather important on the short term, 87.5. Above that mid starts to squeeze toward new highs. Failure to see acceptance above it could lead to a digestion sideways to down type of day. So overall, again, this market's been very bullish. We have a great trending market here. You can see a great trending structure. If we're toward the end of this recent move, again, we could either go sideways or go flat a little bit here, and a defense down off this area could provide the next good bounce, and that could be 66 evens. So we've been talking about that 65.50, which is about right there, that LVN. Now if we get down even into 66, it could still provide a bounce. So anywhere between 65.50 and 6600s could provide a great market structure support area. Again, this market has seen a little bit more of a pullback than the ES or say the YM. So when the NQ gets going, it does tend to pull back here, at least to some degree, over a 5 to 7 day span. So that could easily bring us back into the zone and still be structurally sound within the uptrending framework. So we'll see how much more of a pullback we get. Again, the higher odds opportunities are defending the primary trend. If you counter trend here, you have to do it with discipline, with risk management in mind. You also have to know that the move is likely to be a little bit shorter in terms of target potential versus a primary trend move. So just keep that in mind. All right, let's take a look here at crude oil. Here's a look at crude. After we saw the recent rally here, we've mostly gone sideways. If you look at this, say in a lower time frame, 15-minute chart perhaps, you'll see a nice little framework for a trading range has developed at these highs, and that framework basically could continue to play out as this thing develops, you know, anywhere between 62.50 and 65.50. We could be looking at a period here where failed new highs, failed new lows could be in play, because we've seen a recent rally, very significant, but we've yet to see any rest or digestion of that recent move. This could be the phase where we see some of that digestion as it builds out. You see a natural LVN developing here off 62.50s. You can also see that pullbacks into the trigger zone continue to be defended, and so any pullback into that trigger zone again could offer an opportunity for defense. If this thing were to kind of go sideways and build out a little bit, you may begin to see these PIMAs come in and provide support and meet price. So overall, right now, look to defend major pullbacks. This thing remains rather bullish until proven otherwise, and I think failing to hold below 62s, 62.5, that LVN would be rather significant on a short-term basis. But again, expecting bulls to come in and defend. And the likely outcome, again, from compression to expansion to compression to expansion, is we could see a little bit more development up here between 60 even and 65 basically. Very similar to what we saw back here before another move occurs. So on a longer term basis, we could see a little bit more development, which means pullbacks, failed new lows, those types of things provide excellent short-term buying opportunities. All right, let's take a look here at gold futures. Gold continues to see movement here. We had a little bit of a push up where it held for a couple of weeks, but from here we've seen a breakout. We've seen some wide range type of days. We've seen some nice impulse moves develop in the intraday and the short-term time frame. So continue to watch for those. They're providing great targets and great key levels to watch for trade opportunities. Right now you see prices basically up here near 1338, still holding above 1330. That's a key pivot right now. So that's the short-term pivot to watch. Failure to hold that pivot could open up a return back toward 1306.60, that lower FOMC key level. So a short-term move lower. And then that could provide, again, another bounce back up as price hits the trigger zone, holds below those lows, and perhaps begins to fail. So anywhere between 1300 and 1306 could provide a short-term buy for a return back to test these highs, as perhaps we see a wider range form here as well. So that's something to consider. But overall, 1330 is very important. Any failed new lows below there and a pop back above could be a short-term buy opportunity. So continue to watch that pivot in gold. All right, that's it for now. Let's see how these play out heading into the rest of the session. Good luck and trade well.